Let's look at part 1 of the required. It says calculate and advise Prudence on what the tax implications will be for both option A and option B. You are required to indicate what the effect will be on Prudence's taxable income and also what the effect will be on Prudence's balance of remuneration as determined in the 4th schedule. I wouldn't have to tell you this, you would have to know that. Under both option A and B, Prudence will be responsible for all the costs of running the vehicle. The costs of running the vehicle are expected to be the following for a year, like a license, fuel, maintenance, and insurance. Under option A, Prudence will have annual finance charges of 95,000 rands in respect of the vehicle that she will purchase. Okay, so part 1. And I might actually change it a little bit, not change, but what I want you guys to see, I'm going to write, I'm going to change this a little bit in your version just to say, rather that it should be calculate and advise Prudence on what option will be cheaper. Which option is cheaper? Which option results in the lowest amount of tax? That's basically what the focus is here. Okay. So, under option A, she gets a travel allowance. So let's start with that. The travel allowance, and this is the taxable income effect. Right, so our headings, description, calc, / explanation, rands. All right. So, for those of you guys who have seen the work through questions, I always follow the same approach when I do travel allowances. I always start with the kilometers traveled. Now again, it's optional for you if they don't include it or include it for you, it's optional. Right, so she must have an accurate logbook. She expects to travel a total of 42,000 kilometers, of which 31,000 will be for business. Right, so you can see they give us the most important ones there already. So you don't have to write down what I'm doing here. But I like to always have it in front of me. Right, I actually always like to just also calculate the private and whatever one is missing, just in case I need to make a reference to it in a bit. Use your own judgment there. If you feel it takes too much of your time, then don't do it. Right, kilometers traveled. So now we do the deemed cost per kilometer. I'm going to just put down the structure of what I'm going to be putting in. We're going to get the fixed cost per table. Then we're going to calculate the fixed cost per kilometer, then the fuel cost per kilometer, and the maintenance cost per kilometer. Right, so she will purchase a vehicle with a cost of 600,000 rands, including VAT, excluding finance charges. That's correct. 600,000 rands. So she will be sitting in, you go to your travel allowance table, the correct one, whichever it was. We're using this one I've got here. Right, so she is in this area where it exceeds the lowest and the top amount. Right, so 154,879, 150.9, and 84.9. So 154, sorry, what was the amount? 879. So the fixed cost per kilometer is 154,879 divided by the total kilometers. Right, gives us 368.8 cents. The fuel cost per kilometer, 150.9, and maintenance 84.9. I like to round it down to 1 decimal because the table is always rounded down to 1 decimal, so I'm talking about that over there. Okay, this is deemed cost per kilometer. Then the question also told us that she kept a, if we just go a logbook of the actual costs. Right, she's responsible for all the costs of the year. Right, and I'll just make a comment also here. Assume she will maintain an accurate logbook. Okay, so license, fuel, maintenance, insurance, all of these costs are allowed to be deducted for a travel allowance or taken into account. So let's do it over here. So here we calculate now the actual cost per kilometer. So first one is wear and tear. The cost of this vehicle is 600,000 rands, but you need to remember, if you go and look at section 8 of the Act, it basically always refers you, or it gives you an amount there, but it's always equal to the amount lowest in the tax table. So 595 is the max that we can claim. So 595 divided by 7 years, and it's for the entire year. Okay, so that gives us 85,000. Then the question also told us that she incurred finance charges of 95,000 rands. Now that 95,000 you need to apportion, because you can only calculate it on the maximum value allowed for the travel allowance, which is the 595. Right, so that's how we obviously say 595 out of 600,000, that portion of the interest is allowed. and then the running costs. And these running costs is the 72,000 there. Okay, so we add all of this up. $251,208. So our actual cost per kilometer is 251,208 divided by our total kilometers of 42,000. $598.1. So the taxpayer can now use either 604 or 598. You want to make your tax deduction as high as possible so that you pay the least amount of tax. So thus, taxpayer or Prudence will use the deemed cost per kilometer. Now we can calculate the taxable portion of the travel allowance. We've got the travel allowance, which is how much again? Oh yes, 240,000. So 240,000 less business travel. So the business travel is, we'll use the rate that she is using, 604.6 times our business kilometers, 31,000. Gives 187,426. So the taxable travel allowance is 52,574, and this is the amount that will go into your rands column. So this is the effect on taxable income, 52,574. Right, the question asked us also for the effect on the balance of remuneration. So I'm just changing the color of the pen here. And what portion of the travel allowance is remuneration? 240,000 guys times 80%. Let me actually make sure, is it 80% or is it 20% we have to use there? Let's quickly see here. If the total kilometers was 100%, then 31 over 42 is 74% rounded, so 26%. Because we have used less than 80% or less than 80% of our travel or total travel as business, we have to calculate remuneration using 80%. If it was 80% there, we would use, or more, we would use 20%. Just remember that rule. So 240,000 times 80% is 192. Okay, so these two figures, I'm just circling it to make it a little bit easier for me to find them in a few seconds. So now we're going to do option B, company car. So let's start with the effect on taxable income. Okay, so she's going to get a car, 720,000 rands, no maintenance plan. Okay, so 720 times 3.5% times 12. From that, we deduct less our business travel. So it's 302,400 times 31 over 42. Okay, gives us 79,200. Less running costs or risk costs. So, license, insurance, maintenance, fuel. Okay, so what are these costs? License is 1,000. Right, license is 1,000. Fuel, just hold on for a second with that. Maintenance is 8,000 and insurance is 30,000. So let's do those. 1,000, 8,000, 30,000. Now all of those we have to multiply. We've already removed this. What we've got left here is only private travel, because we've deducted all the business travel over here, this amount over here. So we left with only private travel. So you can only deduct the private portion of these costs incurred, because that's the only thing that's left there. Just remember that logic. Right, especially if you haven't revised it in a while. So we can take the private kilometers, 11,000, over the total, 42. Right, so 11 over 42, 11 over 42. You get what I'm doing there. So that's 262, 2095, 7875. Okay, then the fuel. So the fuel is the tricky one that you need to be aware of. You don't use the actual amount incurred. You go to the travel allowance table, although it has nothing to do with a travel allowance as a company car, and you go and use the fuel that's there, 150.9 cents times 11,000 kilometers. $165.99. Right, so we add all of this up, gives us 52,387, 52,387. That's just the cash equivalent, but it's also the effect on taxable income. I'm just reminding you of that. So that's the 52,387. So that was the taxable income. So now let's just change color here, and we do our balance of remuneration. So the balance of the remuneration for the company car is everything that we did here, right, times 80%. So you can literally take it if you want and say 302,400 times 80%. And that gives us 241,920. Okay, and then you'll see, guys, I recommend, let's just do a quick summary here. Summary, option A, option B, taxable income, and balance of remuneration. So option B here at the top, Balance of remuneration 241,920. Taxable income 52387. Option A 192 for the balance of remuneration and 52574. Okay, so which option is better for Prudence? So let's quickly look at it. So option A is 52,574 and option B is 52,387. Right, it's 187 rands difference. So option B is 187 rands cheaper. So that's the one that she would prefer there. When you look at the balance of remuneration, option B is higher than option A. But now what's important for you to understand here is, remember, balance of remuneration calculates the monthly employees tax. So this means that overall at the end of the year, when Prudence does a calculation, she'll be better off to use option A. But during the year, 240, she'll have less tax in her pocket on a monthly basis, because they'll withhold more tax on a monthly basis when she calculates pay as you earn. Right, pretty interesting that it works out like that. But, so which one, should you be concerned about this? Well, if she on a monthly basis requires more money, then maybe you should consider this, but overall, this one is 187 rands cheaper. So, if she is worried on a monthly basis, just looking at this information right now, if she's worried on a monthly basis of our cash flow, then this one might work out cheaper. But what is important for you to remember here about these two options? Option A is a travel allowance. So she's going to have to go and buy a vehicle of 600,000 rands also. And she has those finance charges we even see that she has to incur. So that's not being taken into account here because it's not tax. That's her personal decision. I'm just pointing it out to you. That's something that you have to decide. Under option B, you're going to pay a little bit less tax, and you don't have the vehicle costs that you have to incur. Obviously, you don't have an asset afterwards, but you don't have the vehicle costs. So those are all things that you would have to consider. Okay. Then, guys, we'll continue with the rest of this just in our next recording.